Hi, everyone. We're here at the Metals Investor Forum in Toronto and just getting ready for some interviews. We've got Ian Harris, who is president of Outcrop Silver and Gold. Ian, thanks for being with us today.
Thanks, Peter, for hosting that important silver panel.
My pleasure. You certainly have a standout silver asset with Santa Ana, and I'd really like to get viewers to get to know both Outcrop and, of course, your flagship project better. Why don't we start by digging in a little bit? Tell us what makes the flagship Santa Ana really what I guess you would call a world-class project, and how it compares to some of its peers.
Yeah, so we do spend a lot of time comparing ourselves to understand where our value is coming from. And there's definitely, first, there's not very many true primary silver projects in the world anyways, right? It's one of the reasons why the anticipated supply-demand squeeze is not going to be easy to unsqueeze. Only about 25% of all silver production comes from primary silver mines, which obviously are the most leveraged to silver price, where you could argue copper is agnostic to silver price. It is really a small peer group, right? So where I think the standout for Outcrop, which is the reason why we're in that pack, is the obvious one is it's one of the highest grade deposits in the world, if not the highest undeveloped project in the world in terms of grade. And grade is important because that's the value of that rock coming out of the ground. But for us, it's also, so it's the value of the rock. And then the first is you got to get that silver out of the rock into some product that is you can sell. And so we are seeing a 96% recovery in our metallurgical test work and 8.5% recovery in gold. So that's important because we're not losing. It's not going to a tailings dam. And the other part is that's from flotation and gravity alone. So we're getting amazing recoveries without the use of cyanide. We don't have to leach. And the third one is once you get that stuff, right, you got to sell it. And so the last piece is we have a very high grade precious metal concentrate. It's so high grade, it could be smelted directly into doré. Why doré? Because doré, you get a nice little bar. You're going to get paid 99 to 98% of the value inside of it. It's a high value, low cost. But the other would be a precious metal concentrate. Now, if that silver was in a zinc concentrate or a lead concentrate, you might not get paid very much from that lead smelter or zinc smelter. But in our case, it's a precious metal concentrate. And feedback is we'd probably see about a 98% payable on that concentrate. So it's worth a lot in the ground and as a final product, and we get a lot out. So I call it the silver trifecta. And that's really a big part of our valuation is that, and I would say the others, we're probably the smallest resource at 37 million. Many of the guys are 100 million plus size resources, and that creates a lot of value. Those are the ups and downs. So the truth is, I know the way to create more value is taking that 37 and getting it closer to that 100 million mark, which is basically our growth plan.
Excellent. So in fact, speaking about growing it, you've really had some pretty considerable success on the exploration side in the past year. And maybe you can tell us a little bit about how that evolved and how it's getting us to where we are now.
Sure. So the company put out its original resource estimate, its maiden resource estimate, that 37 million ounces in April of 2023. Yes. And I joined in June of so after that resource came out, I'm not a geologist, I'm a mining engineer. My focus is, okay, how do I get it towards project development? And somebody who's still a board member, Joe, who helped discover it, did that part of the discovery part. So it's now re-executing on that similar plan. And I said, how are we going to grow this resource? And the majority of the resource was in the north. But it was probably only about a third of the overall trend. So what do we have to do? We have to make a big jump. With me is Diana Alvarez, who are country manager, and a big part of this, our corporate relations. And I said, we did over 100 right-of-ways last year alone just to be able to get and drill test some of these targets and execute on the ground. It speaks about the relationship we've developed. It's not support, it's cooperation. And we had multiple discoveries last year, which means this year I'm sitting in a very comfortable position. It's about executing accretively. It's about we need to convert those resources in the ground to a resource estimate. are those targets in the ground that we now know that are drill tested. Okay, now we got to drill them out and convert them to resource. We're going to spend about $12 million this year, and I think we could at least triple or quadruple the valuation of the company, because our valuation is based on ounces in the ground, and with a high level of confidence and be able to execute on that. And so I really like that. I like that we've been able to we put a massive amount of effort in last year to allow us to drill this 24,000 meters this year that is focused on getting to that goal, which is adding more ounces to the book.
Excellent. So from this point forward, how do you plan to advance the project, to maybe give us an idea of what the outlook is to kind of get there?
Sure. So our original resource is really based on 6 different individual veins, each one adding a component to those 37 million ounces. So this year, it's really about going after 4, 5, maybe 6, if we're lucky, areas where we know that we can add resources, and drilling that out on a sufficient spacing that there's confidence in developing an updated resource. And at the same time, we still got to keep going and creating that more pipelines. We'll still be testing some new areas, especially down on the southern end of the deposit area, so that the next resource update is we have that inventory built up. And we literally have a spreadsheet that is average width, average grade, success rate of hits, right? Overall strike, potential number of ounces, dollars per meter, right? And so then, or per ounce, really. So meters per ounce, that translates, then we know what our drilling costs are. And we want to start on the areas that are the most ounces for the least amount of cost, which I'm telling you is considerably higher, about 4 times higher than our current valuation that we see for the ounces we have.
Excellent. And so when it comes time for a resource update, I know that there's only so much you can tell us right now, but can you give us some idea of what we might look forward to in terms of how that resource could potentially grow?
Oh, maybe I'll be a little weaselly on this one, but I said I look at least double, triple, quadruple the value. If we're valued at $2 per ounce in the ground and I'm spending $12 million, maybe somebody can do the math without getting too far. Sure. And that's an internal. It's not guidance. Understood. It's our goal. Okay. Right? But it's a solid goal, and it's a solid goal based on we know, but of course it's not called exploration because you know what it is, right? Exactly. But that's the background. We want to make sure that I'm spending 12 and I'm returning 24, 36, 48 million to my shareholders.
Excellent. So when it comes to this year, as we look forward, we're still only in March, or just about. By the time people see this, we will be in March. What do followers and shareholders have to look forward to in 2025? What kind of milestones and catalysts are there that we can look towards?
I like summing it up on like the last slide that I just had in today's presentation, which is we have an accretive exploration. So as we get closer to our updated resource, I think market will start putting that pre-putting the value of the expectation of where our resource estimate will go. The other one is we are obviously highly leveraged. I know you're a believer that it's what causes the wheels to fall off, right? We know the wheels are going to fall off, right? Sure. But it's when they're going to fall off. But obviously, because we're primary silver, there's so few of us, we're highly leveraged to silver price. But there's a third one, really. It's that overall, all exploration equities in terms of historically are extremely low valued. So we get that triple potential. But my favorite one is I can wait because I know I'm going to create value until that time.
Excellent. So, we've pretty much covered all the ground that I was looking to cover today. Is there something you want to kind of leave us with in terms of things that, stakeholders, followers, investors may want to keep as a takeaway from Outcrop?
I think the thing that a huge source of pride, I talk about the relationship we've built with Fallen, that they put that letter L in it to represent the legacy. And that's the way we take it. And we're now a part of the DNA. We work together with them. They're proud of the legacy and they see a better future together and working together. That's a relationship that's been beautiful to watch develop over time. A huge benefit last year being able to get into these so many right away, so many agreements to be able to test in these new areas, but really maximizing the co-development, right, that we have together. We go out to a new drill pad. We also improve the roads, and they're there and they're working. Hey, go this way. No, me check that. And they're really a part, and it's a proactive relationship. That's something that's very, very beautiful to see.
Excellent. Well, Ian, thank you so much for this great overview of Outcrop. We certainly have a lot to watch and look forward to, and it sounds like the story is just going to get more and more exciting.
Thanks, Peter.